Hey everybody, it's Pete. Good morning. Thanks so much for joining me today. Appreciate it. Welcome to today's episode of Stocks for Breakfast. And as advertised, we're going to talk about Chargepoint, some of the other EV stocks as well, EV charging stocks, EV stocks, and which ones are in play, which ones aren't. Probably about a month ago, in this very video, we were talking about how much they were all obvious. All of them were breaking out and buying opportunities, but the tape has changed quite a bit. Even the bigger picture of the market, which you're going to take a look at in a second. We're actually going to use the QQQ as a proxy today. We're going to talk about the broad sector rally that we've had for the last 2 days, how it already, after only 2 days, might be a little bit overbought because we're actually heading into all-time highs, especially in the SPY already. Maybe one more good day and the SPY will kiss all-time highs again. So we're going to break that down. We're actually going to talk about something called the bullish echo today, which we've mentioned before in the past, but I want to make sure I teach it on this video so that you understand the difference in buying stocks as a day trade versus buying stocks as a swing trade. So Chargepoint earnings, though, are the first thing that we're actually going to talk about today. So stick around. I'll be back in just 1 second. Okay, so thank you everybody for joining me today. As with every video that we do, these are for educational purposes. It's up to you to make the final decision. It's up to me to help you make better decisions. So I actually want to start out before we get into Chargepoint. We'll go right into that, but I want to talk about the market and I want to talk about the little bit of a bigger picture of the market and how right now this affects position sizing, profit targets, whether or not you add to trades at this point. We've been having some really in-depth coaching calls recently, and a lot of the topics on the coaching calls have been about trade management, position management. But I think the single biggest thing that I have been teaching people, for lack of a better way of putting it, is activity level. It's very common for new traders and especially new members who come into our boot camp to be super excited about we have to trade, we have to trade, we have to trade. But really what you're learning in the boot camp and hopefully through these videos on YouTube is you're actually learning when to trade. When to trade and how to trade is more important than the frequency of trading. I get it. Look, I mean, I'm still excited to trade. I love to trade. I wake up early every day. I can't wait to trade. But I don't trade simply because the market's open. I trade because I think there's a good chance of making money. So I want to give you that little bit of a tidbit without necessarily calling it advice, more so experience of understanding how to make money month after month after month with reliability, quite honestly. And it really comes down to the context of the phrase that I use all the time, which is if you don't dig yourself a hole, you don't have to dig out of it. And the second part of that is that it's easy to make money when it's obvious. So part of the coaching call that we had on Monday night, and again, if you're in the boot camp, tonight is our second coaching call of the week. If you want to learn about that, click the link below in the description. Tonight, we're going to get a little bit more into the tactical side of things of getting into and out of positions. So I can't stress this strongly enough. Too much emphasis is placed on show me the entry, show me the entry. Is this the perfect entry? Is this the perfect moving average? That is not the number one priority, especially if you're a new trader. The number one priority for new traders is it a good idea? You do not even need to look for an entry if it's not a good idea, okay? Which is going to take us on over into Chargepoint right now. We're just going to pull this up, and I'm going to talk about why the stock, which actually raised guidance, is going down. We're going to take a look at that right now. So we're going to hop on over here into Amazon. So you can see this is usually the biggest thing that we talk about, right? Raises full year guidance. That's usually the number one thing that we talk about. We come on these videos, and we've been talking a lot, especially in the heat of earnings season. We get into a lot of discussions about you're looking for the growth numbers, what was expected, and then what actually came out. And we always say we're paying for the cash flows going forward, which is why the guidance number is so important. So you would think here with them reporting raising their full year guidance, that's a good thing, right? However, the reason the stock is going down, if we just pull that up right now, last I looked, it was close to 4%, 3.5% to the downside right now. The reason that raising guidance is not lifting the stock is if we scroll down a little bit more over here and we get into the net income and loss. The net loss was bigger than expected. And that's why the stock that raised earnings is actually going down now pre-market, because the net loss widened compared to what was expected. So remember, everything that we're doing when we're looking at interpreting the earnings numbers, it's what is the growth number that's expected, and then what growth number actually came out. And in this case here, they kind of sugarcoated it. I don't know if you've ever had an argument with somebody, or you want to make a point, you kind of sandwich it, where the one side of it is something good, the middle part is the hard part to tell them, and then the other side is the sandwich. So you kind of sandwich it with good news. They kind of sandwiched what they said with raising the guidance and the sales numbers, but in the middle of that was the wider than expected loss. So that brings us into whether or not the stock is actually tradable right now. And I'm going to break it down the way that we've been breaking down a lot of opportunities recently, which is whether or not the order flow is right now telling us it's time to get in, and even if we start a new position. So what we've been mostly doing is we've been breaking it down on the weekly chart, because it's a little bit of a bigger picture, not only with the weekly chart, but also want to break it down on with volume so we can read the tape. So here's the biggest thing I want to get across. Now, if you're just looking at yesterday's price action on the weekly chart, hopefully you've been watching these videos for a while now. And if you haven't been watching the videos, I just want to give you a very super quick candlestick lesson on how we look at this. There's 600-page books on candlestick, and there's only two. As far as I'm concerned, there's only two that you need to know: energy candlestick or indecision. That's it. And you can see that on the chart right now, and especially in the most recent price action of Chargepoint on the weekly chart, where we're seeing energy, and then we're seeing 3 weeks of indecision. Then we're seeing bearish energy, and now we're seeing a melted candle, but it's also a bullish U-turn. So if you remember what we've been talking about in the market, specifically on the SPY, and if you haven't seen this, I just want to make sure I bring this up again. We've been talking about from 1 week to the next. Is it an energy candlestick? Is it a bullish energy candlestick? Is it a bullish order flow? Or is it well bid or well offered? So all of those things, we had 2 weeks of selling in the SPY, which you can see here. So when we came into the week this week, we were super, super clear last Thursday and Friday, and coming into this week, that we needed to hold the opening price on Monday and see this week go well bid. If we started to see that, and again, well bid means higher highs and higher lows. And again, this is why we use the term order flow, not trend. I want you to visualize that there was real orders behind that, supporting the higher prices, paying higher prices, which is what we've seen now for 2 days. So this week has been a pretty good week of seeing follow through. As a quick aside, though, raise your hand if you've ever felt like you've had three ideas. You pick the two that don't move, and the one that you don't actually takes off. I had a little bit of that this week so far in one of my swing trades, where one of them lined up absolutely perfect and didn't move while the market exploded. So we're going to try and catch up on that today. But if you think you're the only one that happens to, it happens to everybody. So anyway, getting into the order flow in Chargepoint here today, we have the start of a potential momentum reversal. Now, the big thing here is you got to separate momentum from obvious order flow. So if you take a look at Chargepoint right now, you can see these 5 weeks of buying a little bit early in the year, where it was obvious smart money was stepping up. It was obvious smart money was putting real capital on the line, paying higher prices, and you've heard us talk about this a lot, holding the bid. So as long as that order flow is obvious, where they're holding the bid, which means selling is coming in and they're supporting it and buying that selling, which is where higher lows come in, and they're paying higher prices, that's when we dive in and we look to piggyback what they're doing. And when that happens from one day to the next, when that happens from 1 week to the next, 1 month to the next, that's when we can have conviction with accepting risk to get in and piggyback on what they're already doing. So how does that translate into what Chargepoint is doing right now? We've only seen 1 day of price action where we opened lower, reversed into earnings. So now what we're seeing on the weekly chart is a potential reversal. So remember, a lot of what we've been talking about, especially the last 3 weeks, because of how challenging the market's been the last 3 weeks, is it is critical for you to spot what we're talking about on Chargepoint right now. Say, how long has the smart money been buying the stock? If it's 1 day, 1 week, you have to mimic what they're doing with position size. And as it pushes up and pauses and pushes up and pauses, you start to add as they start to add. So in this case right here, you look to the left And can you right now say, wow, it is really obvious that they are buying the stock right now and I can't wait to join them? The answer is no, absolutely not. So for me personally right now, I need to see more proof that they are stepping up with money, and then I'm going to piggyback on what they're doing. Until I see that proof, CHPT for me right now is a do nothing. And again, this kind of gets back to how we started today's call out, talking about understanding the activity level in a great market, which should be more, or the activity level in a tougher market where you really need to maybe do a little bit more game planning and be on top of the ideas and maybe even reduce your activity a little bit. I get it. I'm as excited to trade as anybody. I get up at 5 o'clock every day. I can't wait. I do all my game planning. I'm excited just like you. But you know what excites me even more? Seeing my account go up. Seeing my account go up because I only trade when I feel there's a good chance of my profit target being hit versus my stop loss. So right now in CHPT, the day after earnings, I am not seeing that. So what do I need to see? I need to see exactly what we saw last week into this week in the SPY, which is if buyers start to step back in, I want to see more than just 1 or 2 days. I want to see from 1 week to the next, which would be 10 days of trading. I want to see them paying higher prices and supporting that bid. So for me right now, CHPT is not a trade. So I want to be clear about that. But what I think is more important is why I feel that way. Guidance was good, disappointed on a wider loss, and right now we're not seeing smart money step up. This is the conversation that we've been having a lot recently with stocks like Peloton and Roku and even Zoom for that matter, where they've been getting hammered. And people constantly saying it used to be up here, now it's down here. I want to buy it just because it's cheaper. That's not a good reason. We make money. Stocks go up and down. We make money because somebody with deep pockets and a whole team of analysts think that it's going higher, and it's a value at that price. And I'm not talking about value investing. It could be from one earnings report to the next. They believe there's value in the cash flows that they're buying now, and they start to commit capital to that. When the deep pockets commit capital, it's so much easier for us to trade when it's obvious. So right now, Chargepoint, that's the entire analysis of why I am not doing anything yet. And more importantly, how I just scripted out what I need to see over this week and next week before I even consider getting in there. Most traders don't go into that much detail. Most traders just run a scan and say, I want to buy the stock because it was up yesterday. That's not a strong enough argument. Not at all. You need to say, and I want to buy because of this, and I want to buy because of this, and I want to buy because of this. Not just because you saw it on Reddit last night. That's not enough of a reason to have conviction. You will have more conviction and you will stop hesitating when you start to build that argument. So that's going to take us now into looking at the sector rotation. Again, this is something that we start out with every day. And I actually had somebody yesterday say that we're talking about the same thing every day. Yeah, we are. Because this is how you do it. You game plan the same way every day because you're digging in and looking to find the smart money. So I don't want to call who it was on the stream, but 3 days in a row, they've called out that I talk about the same thing every day. And yes, I do. Simply what we talk about changes, but the structure of what we do is the same every day because I'm going on a treasure hunt every day. And hopefully I'm teaching you to go on that same treasure hunt every morning as well. So that's why we start with the sector rotation after we discuss what the market's doing, simply because we want to find where smart money is already allocating capital, and then we're going to piggyback on what they do. So getting into this, we're going to break down a little bit here as far as what areas we're going to be looking for buying opportunities. So if you remember that we talked about last Thursday, we actually came into the day saying energy stocks were the first place we're going to be looking because they showed relative strength when the market was taking a hit. Now we're going to work our way down into industrials, and we're even going to take a look at financial stocks and look at some opportunities. Now, the big thing to be very clear on here, okay, some of these stocks within the sectors that are strong, some of them are just breaking downtrends, some of them are breaking out. We're going to make the separation. I want you to really dive into this. There's a difference between our tracking journal and our trading game plan. The trading game plan are the stocks that have room to go and already are seeing bullish order flow. The tracking journal are stocks that are in the right sector, but not ready to go yet. And I'll show you a couple of examples of that probably right now in, let's say, the financials. Morgan Stanley is nearing levels where we'd consider an entry. Goldman Sachs is still in a downtrend, but getting close to breaking that downtrend. So one is a trade now, one is a trade alert. And that's important stuff to recognize as well. We get a lot of questions, especially from new members in the boot camp, who their first top challenge, and that's actually what we do on our Monday and Wednesday coaching calls, is what are your challenges to executing the strategy? Now, I'm not talking about setting up software or anything like that. That's stuff you do on your own time. What we're talking about the challenges, what part of finding good ideas are you not on top of yet? That's the part that we want to get to, because we want to whittle it all the way down. So when you start to do your game planning, you know exactly what you're looking for. So again, hopefully on these free videos on YouTube, I'm teaching you which stocks to consider buying. And then you go into the market, and it's just a question of timing those entries, which, by the way, I want to talk about something I mentioned before, which is called the bullish echo. And I'm going to pull up a chart of the SPY, and then we're going to go over those three industries that we just mentioned. So I want to pull up a daily chart of the SPY, and I'm going to zoom this out just a little bit. Okay. Oh, actually, let me go back over here. So what we want to talk about is, what does the stock normally do? And how does what the stock normally does translate into whether or not you should be buying that stock today? This is probably one of the biggest questions that we get for newer traders, which is, how do I time my entries better? You need to understand, where are you to the optimal entry? Now, the optimal entry is where the risk is the least and the profit potential is the most, right? That just kind of makes sense. But here's where it can get super, super simple for you. We call it the average true move. So if you look at what the SPY has now done in just 2 days from the lows of last Friday, it's over a $19 rally in 2 days. Awesome. Unfolding exactly the way we wanted it to. And that's where newer traders get in trouble. They don't have their timing down. If the SPY during a normal move moves $25, just for argument's sake, which is pretty close. So if in a bullish environment it moves $25, and it's, as of this moment, in 2 days from the bottom of the previous move has gone 19. Well, if it normally goes 25 in a bullish move to the upside, and it's already gone $19.25, which is pretty much what it has from that bottom on last week, how much risk versus reward is still left on the table? If 2/3, if not 80% of that move is already gone, that's where we go into today, looking for what we call a bullish echo. So this is the top challenge that we get, is, how do I know if a stock is a day trade versus a swing trade? I'm going to talk about that right now. First, I want to make this super clear. Every idea that we're talking about starts out with as a swing trade. So I am looking for bigger picture order flow to consider a trade over the next 3 days, 10 days, however long the trade ends up unfolding, depending on when the profit maximizer takes us out of the position. So I want to be clear about that. I am first looking for swing trade ideas. Then I go to where the optimal entry is on the daily chart. So again, I'm just going to use the SPY here as an example. If this is where it started and it normally goes $25 and it's already gone 19, that's a valid swing trade idea, but not a swing trade now, because it's too late in the swing trade move. So that translates into the bullish echo. The bullish echo is an obvious bullish opportunity that is too far from the optimal entry. So that means I will look at those ideas today as day trades, looking for that bullish echo. The bullish echo means kind of like the last bit of buying for what the stock normally does. If you can do me a favor, can you type in yes if you understand what I just mentioned? Because I just want to make it, I want to challenge you to think a little bit deeper than maybe what you're doing right now. And all you need to do is look at your favorite stock, and let's say it's in a bullish order flow where it's going up. Look to the left and say, what does this stock normally do when it rallies? Then ask yourself, if you're considering buying it today, how far close to the optimal entry is today? I am willing to bet you'll sit back in your chair and you'll say, wow, it was staring at me the entire time. And here's where you're going to see it manifest, or where it already has manifested for you. It really comes down to this. Raise your hand if you feel like every time you buy a hot stock, it goes up one day, you feel great, and then it pulls back the next 3 days, you get stopped out, and then it goes up and does exactly what you thought. Used to happen to me all the time when I first started trading, until I developed average true move of what the stock normally does, and understanding that if it's too far, then I'm only trading the bullish echo. It happens to everybody. The amount of people that I speak to, I don't understand. I buy all the right stocks, I get in it one day, does exactly what I thought. The next 3 days comes back, stops me out. 2 weeks later, it does exactly what I thought. That's because up until today, you didn't understand the concept of average true move. So we're talking about swing trading now and deciding which of those swing trades would only qualify as a day trade because of how far they've moved, which takes us into what I'm talking about in the SPY today. So based on what the SPY normally does, I still believe we're going up today, but I wouldn't be looking to initiate a new swing trade in the SPY because of where it is from the optimal entry, and because we're coming up to some pretty big resistance, which is the 471 level, 472 level, where the last 4 times it got up to that level, it got shoved down. That doesn't mean it can't go further than that, which is the last thing I want to explain. I always get a question, be like, well, does that mean that it can't go higher than that? No, that's not what I'm saying. This is another step that you really need to understand, because it matters with risk and reward. The targets that we're talking about right now are the targets we're putting out there in order to accept risk on the trade. But it's not the maximum we're looking to do, because technically, when you're looking to capture the biggest part of a move, you're doing what's known as trend trading. And trend trading doesn't put a target on your profits. What trend trading does is it goes up, and at some point it pulls back a decent amount, and that's where you get out. That's where the trailing stop comes in. So the initial target, what we call the IPT, the initial profit target, is only the number we use to justify risk. And we can justify risk because the probable reward is pretty good. In this case, when it's gone too far from the optimal entry, the reward on a swing trade is lower, which means we wouldn't swing trade it until the next pause, but we could day trade it today because it's still obvious. So the risk reward would be different on a day trade than a swing trade. Everybody understand that? It's kind of cool. You might want to watch this video one more time, or maybe even 2 times, and take some notes, because what we just described is, again, the difference between understanding chart patterns versus understanding how to trade. That's what my mission is, to help you understand the difference between the two, because I was in your shoes for a long time where I'm like, I don't understand. I have every book on chart reading that was ever written. I highlighted every one of them, took notes until I was running out of ink in the pen, but that's not trading. Trading is different. You have to trade in order to learn how to trade, and ask questions and trade again. Ask questions, do better the next time. That's the difference between trading and chart reading. So I would strongly recommend watch what we just talked about again. Put it on pause, put it on fast forward, whatever you have to do, and then come back and ask questions again about whether or not you're seeing it correctly. And I'll even take you one further. Leave comments below the video, not in the chat on the side here, below the video, about stocks that you're looking at, and let me know if you think it's near the optimal entry, and I will reply as soon as you make the post on the same day. So we're talking about the same thing. So below the video in the comments, let me know if you believe you're buying the stock near the optimal entry, or if you've stopped yourself because it's too far into the move. So pretty cool stuff, right? All right, so we're actually going to get into some other ideas for today. If you remember, we just discussed, we've been talking about these 3 sectors. We're going to look at energy, we're going to look at industrials, and we're going to look at financials. Okay, so I just want to bring up some ideas for you right now. We're going to start out with energy stocks. Remember, we talked about there are some that are breaking out and some that are breaking downtrends. So one that is breaking out, we're going to take a look at DVN. You can see that there's reward potential. Remember, everything we talk about is reward potential, right? So plenty of reward potential through there if it gets through there. CVX, the same thing. Now that's a little bit different from SM, where we're waiting for SM to break and start heading back up. So we'd be working it this way, where SM would be in our tracking journal, but not in our trading game plan yet. Okay, so now we're going to work our way over into FANG as well. FANG, you can see very different picture where now it's getting up to a level where we're looking for it to break out and looking for some follow through. Okay, COP kind of meets that criteria, but not as strong as the other two. So I like FANG and DVN the most out of this group. So now we're going to work our way over into other ideas to keep an eye on today. We're going to look at industrials. And again, some of these, I just want to be clear on this so that you understand how you start to game plan all this stuff out and you script your entire week before the week even starts. And day by day, you make adjustments on your script. Some of these ideas that have room to go near those breakout levels, those go in today's trading game plan. Stocks that are still in downtrend but are just breaking those downtrends, those go into the tracking journal. Okay, very important to understand the difference. The tracking journal means not yet, but pay attention to it and you probably set alerts. So now we're going to work our way over into the industrial stocks. You can see the same thing on some of those ideas as well. Okay, so we're going to work over here in industrials now. And we're going to start out with BLDR, which actually had a pretty nice breakout yesterday. It pulled back a little bit, but we're still looking. It's actually up $2 again this morning. Let's see. I wanted to make sure Otis is another one. It's actually right near a breakout level. So now you would set an alert at 86 if it gets above 86. UNP probably has a little bit better order flow where it just took off and has a melted candle up through that level as well. ZIM and Info, INFO. Okay, so these are ones that are at or near breakout levels. Now, something like FedEx, we're going to go through the most common ones here. So FedEx, 3M, these are not opportunities yet. So I want to make that clear. It's very important to understand, even though you might be in the right sector, which has performed well yesterday and over the last week, you still need to take it a step further and dig a little bit deeper into those ideas. So we're going to look at now is we're going to take a look at some financial stocks as financials are starting to creep their way up the list with a bigger conversation now about interest rates and some of the financial stocks that we're looking at heading into today. We mentioned Morgan Stanley before. You can see that we've actually been watching Morgan Stanley. 106 has been the level. So now we have an alert for 104 to look for it to get up there, pause, and then take off. So that's technically going into our tracking journal. Okay. That is really the list. So PGR would be one that we'd be looking for. And you can see here, it keeps getting up to this price. This one needs to get above 98 before we start to look to make a run at 108, basically a $10 trade there. ICE just broke the downtrend. And you can see that here. I think we actually drew this on the hourly chart where it's a little bit cleaner. And you can see it broke it here, went into a box here, and now we're looking to get long this one again today. So I can't express this strongly enough. We talked about some very strategic stuff today, and that's really the biggest thing because it's I get a lot of people asking me, can you just tell me the ideas and when to get in and when? I can't do that if we're not actually working together, but I want to keep teaching you the way to manage yourself, the way to manage your week. But again, I can't stress this. It's so important. The most important thing, the first thing you need to learn, nothing else matters without it, is how to identify a good idea. I know that sounds insanely obvious, but it's not. You'd be surprised how many people, even here on YouTube, are asking me about a stock that's getting absolutely crushed. What do you think about buying this right now? That's not a good idea. You're basically trying to buy a lottery ticket and hope that you don't get ran over. If you're going to follow us, if you're going to do what we do, if you're going to de-stress and eliminate all that pain of the stuff that's not working, make your trading simpler, which is what we do in the bootcamp. I saw a couple of questions here about the bootcamp. If you want to learn about the bootcamp, click the link below in the description. The way that we do things is we spot what's already doing what we want it to. And then we just find a spot to piggyback in that direction. If you are finding the market challenging right now, or at all, really, it just means that you probably need to like take pieces out of what you're doing and make it so simple that in a heartbeat, you could teach somebody else to say, when you see that, that's when I want you to call me, because then we got a good opportunity in our hands. If it's not that obvious, if it's hard to find, it's not there. Trading needs to be that simple. It's not dumbed down. It's simple, so it's actionable. And just think about it from a common sense perspective. Why do stocks go up and down? And let's even put that on the other side. Why do stocks go up? They go up because somebody with deep pockets and a lot of research pushes those stocks up. They believe that today's cash flow are worth more at some point in the future. So they are holding the bid. They are literally paying higher prices. That's what we pay attention to. And when we spot that, the next question is, how long have they been doing that? Did they just start? Okay, then I'll just start. Have they been doing it for over a week? Oh, maybe I can go in a little more aggressively because they've made a serious commitment in real money to move, to move that stock from $50 to $55 in just 2 days. Now I'm going to start to pay attention to that and work my way into that position. So remember, what we're talking about here is the push and the pause, which is smart money pushing it up and then taking a break, pushing it up and then taking a break. We make money during the push. We manage risk during the pause. So if you take nothing else out of what we just talked about today, please, on top of the ideas we just talked about, please watch this video again and go back and take notes on the optimal entry and the average true range. And I think you're going to be shocked at how many stocks you bought too late into the move, and you're never going to do that again because that's painful. We want you to make things as simple and repeatable as possible in the context of stacking the order flow where the odds of hitting your target are better than hitting your stop loss. That's what real trading's about, and that's very, very different from understanding how to be the best chart reader on the planet. I don't want to be the best chart reader on the planet. I want to be the best trader on the planet. It's two different goals. Two completely different goals. All right. I saw a question in here about reading charts. I just want to make sure I answer that before we finish. I can't find it now. I'm sorry. I can't find it. So anyway, do me a favor. Go over some of the charts that you normally trade. Go over some of the recent opportunities that you have. Leave a comment, not in the chat on the side. Go all the way down into the bottom. Leave a comment below the video and say, here's the stock that I bought too late, and I'll high five you, because then we could actually be learning together. And now take a look and say, I never saw this before. Start to see if you could find some ideas close to the average true move bottom, which again, somebody just asked before, how do you find that? Look to the left. And again, in a bullish move, this is what I want to point out here. So let's say, for argument's sake, let's use Tesla, because that's probably a popular one that everybody's looking at, right? So if we're looking at Tesla and we're looking at, maybe that's not the best one because it didn't really have any. Let's use Apple. Apple's probably a good one, right? So if we're looking at the longer term bullish move, we're looking at what happens in between the pushes and the pauses in the direction of that move. This is one push. This is another push. This is another push. This is another push. So if you look to the left, again, this is what the beauty of the simplicity of this is. We're not guessing. We're literally letting the stock tell us what it normally does. Then we're determining, and again, I'm just going to use numbers. If the stock normally does $10 before it pauses, how far has it just come? If it's gone $2 and you got the optimal entry, awesome. Your risk reward makes sense. If it normally goes 10 and it's already gone 6, you're like, okay, maybe I could still take it, but it probably wouldn't be a new swing trade. Then I'll shift over into bullish echo mode and maybe day trade it or wait for the next pause. If it normally goes 10 and it's already gone 9, which a lot of stocks have done the last 2 days, that's why I'm spending so much time on this today. A lot of those ideas, you might need to wait for the next pause because most of the swing trade potential of what it normally does is already used up. So please do me a favor. I want to help you. Leave comments below the video, not in the chat, below the video. Type in some stocks that you're looking at and just let me know. Say, I was going to buy this today, but I recognize the average true move. thank you. Like not thanking me, but like thanks for like learning something new. And it'd be kind of cool to see if we helped to like turn on a light bulb for you today and saved you some money, actually. All right. I have to head over and get ready for our gameplay meeting in the boot camp right now. If you want to learn about the boot camp, click below. We have our next coaching call tonight at 4:30 if you want to be on that call. But also, please do me a favor. If we're providing some value on these videos for you, do me a favor, smash that like button and hit subscribe so you know when the updates come out, when new videos come out. All right. Have an awesome day, everybody. I really appreciate you spending time with me today. Thank you so much. Have a good day.